felt it would give us the best access to the strongest possible group of senior insurance decision makers.
InsurTech Insights is a must-do conference, I think, for the network that is built here.
Thank you all for joining us this afternoon. Commercial property is at a tipping point. With climate change, new technologies, as well as increased costs, they are all reshaping how we assess, price, and protect property risks today. This conversation is not just about trends, it's about transformation. I'm Carrie Macca, as mentioned earlier, and thrilled to be here again this year to moderate this panel with these leaders. It brings me back to my early days in joining insurance, where I was a commercial underwriter. The panel here has our executives that are at the forefront of this conversation in the industry. And we'd like to start with a little introductions. While we've had some brief introductions as an intro here, maybe David, you can start and give a little bit more background on yourself.
Sure, thanks, Carrie. So my name is David Burton Perry. I lead the large property practice at Vantage Risk, which is a specialty insurer. My background is entirely in large, complex commercial property, having started with some larger global carriers and now making my way to Vantage.
Hi y'all, I'm Rajkumar Govindaswamy Subian, not meant to be a tongue twister. I go by Raj. I'm AVP of Software Development, and I'm leading the transformation initiatives at Golden Bear Insurance Company. Have been associated with the PNC insurance space, helping small, mid, and large-size carriers for like close to 20 years in their enterprise transformational initiatives, P2 market, and like other engagements. Thank you.
Hi everyone, this is Aman. I'm a co-founder CEO of Further AI, and I think in this panel, I'm the least experienced person when it comes to insurance, but have about a decade in AI and transformational projects with AI. So I'm at the front and center of right now implementing AI for different enterprises, insurers, MGAs, reinsurers, and so on. And excited to share with you what we are learning on the front lines.
Hi everyone, I'm Manmeet. I'm a senior manager with Deloitte Consulting. Been advising PNC carriers for over a decade on profitable growth and business transformation. So very excited to come here and share what we are seeing more broadly in the industry.
And I'd like to mention, I have the iPad here, so we love questions. So if you have any questions throughout this, please feel free to send them over to us. So I'd like to set the stage for our audience as we begin these discussions, just with talking about industry shifts and risk landscape. So the first question is, how has the definition of property risk shaped and changed over the past 5 years?
Yeah, it's a great question, Gary. The understanding of property risk has significantly evolved, right? It has a new meaning right now. Traditionally, property risk was deemed as your like physical damage or loss because of perils and other climatic conditions or so. But now, even though if there is an absence of a direct physical damage or loss, there is an indirect business interruption that is being caused. So the mind shift has changed. There are many intersecting factors such as like the climate conditions or technology advancements or social or economic pressures contributing to all this. And all of you might know like climate is at the center of all of this, right? Like so.
Dave, do you have anything to add there?
Yeah, I mean, I think that when we talk about the risk, how has the risk evolved? So I think that if we look at 5, 10, 15 years ago, when I was early in my career, we were thinking about climate risk and what it was going to portend for cat exposure. We were thinking about things like supply chain risk and contingent time element risks, but what we didn't have was a lot of the data and ways to analyze it. So we would look at these things with a large amount of unknown that we'd have to be pricing in, a lot of underwriting analysis that we felt was, this is the best we can do with what we've got. What's really evolved over the last 5 years, I would say, is significant increase in just the data sets to begin with. So our ability to get insights into what do first and second tier suppliers look like on a contingent time element perspective? Where are those exposures? How can we overlay them with the customer's exposures? How do they overlay with our own portfolio? Where do we see stacking and clashing in that perspective? And then from a CAT perspective, it's, getting better data is what informs the models, right? The models are only as good as the data that's going in. Everyone knows that. So the question has always been, how do we get higher fidelity data, and then how can we analyze it more quickly? So I think the evolution of the enormity of the data that's become available, as well as use of AI and other workflows that can just significantly expedite the underwriter's analysis is allowing us to move faster and price and make decisions with far fewer unknowns than we had previously.
I just add, I think I want to acknowledge this is probably one of the most complicated lines to be writing. It's a non-deterministic climate risk. It's evolving very rapidly, and models aren't necessarily able to sort of predict as well looking at historical data. The challenge gets accentuated in a fairly volatile macroeconomic environment where supply chains are getting disrupted. You're seeing inflation at unprecedented levels. And there is an issue of the insureds not necessarily always being aware of potential insurance gaps that are emerging because of a lot of these changes, right? So I think with all of the climate and the digital risks with connected devices, this is a very interesting yet a very complicated space that we all are living and breathing in.
I can talk about what David mentioned about AI. I think one of the mental models that has really helped me in terms of what AI is that it's a zip file with the entire world's information, which you can talk to. And when you think about it that way, and when you think about insurance and the data, now imagine you can talk to that data that you're receiving, let's say a large SOV that has a list of 80,000 properties, and need to understand what is the distribution and things like that. Previously, you would need a business analyst to write the SQL queries and so on, but now you can talk to it. So it's really moving the insights which were towards the end of writing a risk towards the front. And risk evaluation is changing fundamentally because of that.
A lot of AI and data to help today, but staying on the industry trends and risks, what's one blind spot you think that the industry still has when it comes to either climate risk or severity of risk?
Yeah, sure. The one blind spot that I could immediately think of is the frequency and the severity of the CAT events, right? So, like few years back, as David mentioned, we were all thinking about like once in 100-year event, but now that's not the case. I mean, you're like day in, day out, you're hearing this CAT events. You also have challenges with like your temperature rise and like sea level increase or whatnot, right? Like, so that's one blind spot, which actually impacts the whole system, because you will have to like think about trial risks that are like very much underestimated, and you don't have like enough data to really look at forward-looking approach of how you can estimate and then like better price the risks. So I think that's one thing that I can call out as like the frequency and the severity of the CAT events, and also their cascading impact or events associated with that.
I would only add, to build on that, like it depends in terms of, if we're talking about CAT risk, there are certain perils where I think we feel very comfortable with the quality of the data, how, the insights that we're getting from the models. But then there's other perils, and I would highlight flood, for instance. I think this is a known blind spot for the industry that we're year after year, one carrier or another is going to feel like they got hit by a flood where they didn't expect it, right? We saw this as in a low hazard, low-lying floodplain, and then something happens, and it may not even be like a headline event, and it results in a pretty large claim. So I think that is an area of flood specifically where folks are trying to work on this. I'm not breaking any news. There's probably a lot of vendors out here who are working on flood specifically just because it is so difficult. And then the other element I would add from a fire perspective is, especially if we focus a lot on larger, middle market and corporate clients. The nature of insured locations themselves and the way that they're integrated, the how smart these buildings are, it opens up a whole nother set of risks that we don't typically think about it. Like, we may be very focused on a point of ignition that has nothing to do with, an internet-connected piece of machinery that could somehow malfunction, be hacked, whatever, and it presents an exposure we just haven't considered historically.
I think the one thing I would add just on that point is we have a massive proliferation of IoT devices now, which means we're getting the insights from the devices, but I don't think we've got the layer which is translating into business logic, or how does that drive pricing or risk selection decisions. I think that's a pretty big sort of thing. A lot of carriers are starting to work towards it. I don't think there's any sort of definitive solution out there just yet. For me, like that's a big part. There's also a fundamental shift that we are seeing from a transfer of risk, a shift from a transfer of risk vehicle to a risk prevention consultative sort of model of how you do business. Yeah.
I do have a question that came in from the audience that I'd like to squeeze in here. As CAT events increase and carriers respond to losses, public scrutiny and displeasure with the industry increases. How do we bring more balance to this debate?
I mean, this kind of goes to my starting comment where there's a very important need to engage with both your distribution partners as well as your end insureds to help them understand how the nature of risk affecting their properties is changing. We have been working with several different carriers as they've thought about rolling those programs out. For the longest time, the industry's always had this issue of not being transparent. I think there's a need to drive that transparency through communication on an ongoing basis with the insured, which I think would be helpful to address some of that.
Yeah, I would like to add on to that, right? Like one thing that we can see from there is, like, again, building your portfolio at the right level, better estimate and better price your risks. And at the same time, like, because this involves claims as well, I mean, you can always think about anticipating the losses, and you can also, like, say, make payments upfront. There is, like, a lot of third-party solutions that are available where you can, like, anticipate and then, like, either prevent, or if the event has already occurred, you can actually not wait for the claimant to come through all this whole process, but actually make automated payments. So that will, in fact, like, indirectly impact a better customer satisfaction and experience as well.
Yeah, I just want to add one thing to that. So from the claimant perspective, one thing which is going to change substantially is if there is any loss that has happened, the insured would be much more aware about what to ask and what to say, because they would take the policy form, drop it into ChatGPT, and ask whether this is valid or not. If it is valid, make a case for me. If not, what can I say to make it more valid? So that change is going to happen because that knowledge is available to everyone. And I think the industry might have to figure out ways in which to answer those questions, which are now more evolved questions, in a much more better way.
So go-to-market strategies aren't just for sales and marketing. So I want to dive into a little bit about the advanced technologies we've been talking about and the data. There's a growing tension between policy solutions and platforms. What does it fit purpose like for your organizations?
Yeah, I think there's a space for both. We would always think about what is the overarching business problem that you're looking to solve and how pervasive it is within the organization. For things that are extremely specific to a certain part, whichever function it is, there are certain point solutions that could be the right fit. However, if you're trying to create a competency that sort of straddles the organization, straddles different businesses that you're in, taking a platform approach might be the right long-term solution, and allows you to sort of bolt on. And for the first time, technology is not the bottleneck in a lot of this. And so it kind of depends on what you're trying to solve for.
Yeah, I would like to add a point here. So, as Manmeet mentioned, so technology is not a bottleneck anymore, right? Like, so it again depends upon what you want to accomplish. Um, if you are trying to address a niche or a narrowed down problem, maybe like a pointed solution may be the best fit, right? But if you are trying to like think about like your enterprise level transformation, then pointed solutions may not offer you that like holistic picture. They may not help you with like your overall data management and like overall core platform approach, right? Like, so I would say like a composable architecture, as we call it, is a great fit where you have the right platform, and then you don't stop with the right platform. You always use this best-in-class APIs, third-party vendors to better enhance this, right? And also you build on top of that like with microservices-based architecture. So a composable architecture between the right balance of your like pointed solutions to your core platforms is the way to go forward.
Yeah, I can chime in. I think we are underplaying the fact that AI can write code. And what that means is each of us can actually build our own apps by just going to Claude. And we did that in morning with some people here. And what would that mean is like the platform approach is going to be the only approach where your data is plugged into a platform and people can build apps like we write email. And that's not like 5 years down the line, it's happening right now. So if you go to Claude, if you ask it to create a to-do app, it will create a to-do app, which you can use. But it can go beyond that, from the personal to-do app to more complex applications that you need to run the business, evaluate the risk, look at the validity of a claim, and so on. So platforms which allows for all of that in a secure and compliant way are going to be the ones that will win in the long run.
I was only going to add, I agree with everything that's been said. I think one element that we think about a lot is as we're aggregating all this data, it's not just a go-to-market asset, it's also an iterative product development asset. So we try to think like, okay, we've built this system and we've collected all this data. What insights can we gain from it? And then how can we start to develop products that are maybe over the horizon to help solve broker and customer problems? Whereas if it's too disparate, you're going to have a very difficult time aggregating and accumulating that quickly.
So Dave, I'm going to throw this one back to you. How are regulatory shifts shaping your commercial property profile today, strategy today?
That seems like a loaded question. I think that from our perspective within the market, we look at what the regulators are doing and we try to pay close attention. That we're doing everything necessary to be compliant, because it is an ever-shifting regulatory environment. And so I think having a very robust legal framework that's also tied in with underwriting, claims, operations, so that you're making sure that everything is compliant from that perspective is essential. From a risk selection and underwriting perspective, I think that we try to be, as an industry, as much as we can per risk underwriting in the commercial space. So we're not, as long as we're navigating all of those updates in the regulatory environment correctly, it shouldn't be affecting how we think about the risk itself. So from that aspect, we still have that home base.
Are there any regulatory changes that are impacting technology or any of the innovation you're working on?
In terms of one thing that I really would like to see happen is AI not being allowed to make outbound phone calls and maybe scam people. So that can happen at scale, and that's sort of something that should come in. The other part, from the insurance point of view, IP is actually going to be a big thing as well. So in the software world, we have learned that your data is your data. But what about the data that AI generates on top of your data? Who owns the IP of that? So I think it's not being talked about, and that is an area where the insurance company should think about in terms of the output that AI generates should be an IP of the person who is putting in the input, not the model providers. And there should be a line that is drawn there. Otherwise, yeah, there's an IP that is getting lost without us knowing about it.
Thank you. So everyone talks about digitization, but where have you seen true transformation versus surface level change?
Yeah, it's a favorite topic of mine. So digitization is a buzzword in insurance, not only in insurance but in any industry. So if you talk about like surface level changes, right? I don't want to like put a digital portal on top of like a legacy platform, right? I don't want to do that. I mean, I really want to like see how I can re-engineer the end-to-end workflows, the end-to-end models, processes, etc. So that's where you start, right? Like that's like the first point of digitization, right? Like you don't like just take something that you are trying to like improve and then like just put a silo or a individual layer on top of it. You just like rethink or re-strategize your end-to-end workflows and models, right? So that's the starting point. The second thing is, again, with the advancement of data and AI, you'll have to like think about how you can like make not only better insights but also real-time decision making. How can you actually evolve with data, right? And the third thing is on like with platforms versus third-party solution providers, how effectively you can better architect your like forward-looking risk-resilient system, right? So that's the go-forward approach. I mean, if anybody has to adapt. Um,
I would, I would completely agree with you, and there's a very strong point of view around. For the longest time, insurers wanted to control the end-to-end, right? I want to be the producer, distributor, the whole 9 yards. I think the future of the industry is going to be a lot more partnerships-led. And one of the core, it sounds so simple, is the ability to sort of have interoperable APIs, for me, has been such a big shift, because now you're able to create highly tailored propositions for unique niches in the market. You're able to much better address customer needs than you were ever able to. And all of that sort of feeds in right into, third-party sources, driving the loop together and so on.
Yeah. So I can quickly quote an example. Like, so if we looked at addressing the submission intake process or straight through processing, right? And we didn't want to just like digitize the submission forms. So that's the first aspect of it, right? But we wanted to like have a holistic approach to the entire life cycle of submission intake, right? Like, so we started with obviously digitizing the submission forms, but we also looked at the submission clearance side of it and how you can like take the data that comes into like the system through different means, how you can enhance the data, right? Like we are working closely with some of the vendors like Resequent and all that for property intelligence, and enhancing the data that comes in as a raw data. Maybe like the data is misguiding or the data is insufficient or lacking for you to give the right insight. So enhancing the data and then like putting that in your system of record is something that we are looking at, right? So.
Yeah, I can just add to this one. So I think the move has been from digitization to transformation, which is very interesting, because if you have to digitize the submission process, you would create a portal, the agent should come to the portal, fill in the data and so on, and especially in commercial property, you would have large Excels which needs to be put in there. It takes time, people hate it, and that's why we still have the emails coming in from agents and brokers, which needs to be processed. Now, in the world of AI, you don't have to have that portal. That entire email can be processed by an AI assistant. It can extract the data from it, it can enrich it, and if you take it a few steps further, pun intended, you can even do the guideline checks on it. So it can do a first level of check on whether this risk meets with the appetite or not. All of that was not possible. And I think instead of reinventing the wheel, what's happening is the wheel is now going to move a whole lot faster. And that's going to change the industry in terms of the way it has moved so far. So more revenue, reduced cost, better businesses.
Aman, you hit on this a little bit, but what type of emerging technologies, AI or other, are really making the biggest impact either on claims or underwriting for commercial property?
I can share one example of it. So for commercial property, one of the big problems that's been there is processing those large Excel sheets, which has a list of properties that needs to be insured. That Excel sheet come in all shapes and forms, sometimes in different languages, if you have global operations, and then it has to be mapped into the right format, which adds to delays, which would have gaps, and the understanding of that would not be possible. So that technology did not exist before, but now you can simply take that Excel, drop it into a model which is fine-tuned for it. It will convert it, it will enrich it, it will do reverse lookup, put in location, latitude, longitude, put images of that property as well, that if they're available on the web. So all of this is a big step forward, and it's more about the tech exists, how are we using it to make the process more efficient and maybe unlock new things. So one is the efficiency, and second is the big unlock that is happening because of all of the things that are possible now.
If we believe the future of the sector is risk prevention, not paying for the loss, one of the core technologies that I think I'm very bullish on is connected devices. There's a lot of partnerships we're seeing between insurance companies and sort of OEM providers, especially on the smart devices side, where you're sort of integrating the detection with the risk mitigation side of things. So for me, like, one technology to truly think about is just like the proliferation of smart devices on the commercial side, but also thinking about what is the wrapper that's driving the insights from all those sensors.
Sure. Go ahead. So yeah, not one conversation or session goes without AI. So Aman already covered the impact of AI here, right? On Internet of Things, yeah, IoT devices are the next key things. There is also this parametric insurance that is really changing the game, right? Like, so by parametric insurance, what I mean is driving your overall portfolio of products with innovative coverages or innovative products, right? And also like using third-party solutions to anticipate and prevent and not just mitigate or like pay out for the losses. So anticipate and prevent is the mantra now with parametric insurance and the enablement of innovative products. Yes.
So I agree with Raj and Alman, especially on and Manu as well. But where I get really excited is what you're talking about in terms of freeing up time so that we can start to redefine. I see everything through the underwriter lens, right? That's the world I come from, underwriter lens, and how can we innovate the products that we're selling, especially in the large commercial property space where an all-risk property form has not materially changed in quite some time. When you change the workflows, when we're able to speed up, underwriters are not analyzing the SOVs. That's not taking 60% of their time. Now it's taking 2% of their time. It's broadening fundamentally the way that we can be analyzing risk. It's opening up an entire avenue to saying, what if this scenario? What if that scenario? Yeah. And then how can we develop intelligence and insights that we share back with the customers to say, look, we were able to look at this. Here's how we see the risk today, but you might want to think about these three things. Yeah. And these are the ways that we would think about tailoring coverage to it. This is what we think it would cost, like giving customers tangible feedback on how you see their risk evolving. That's something that in the, up until now, until this technology has really become more accepted, the underwriting teams simply don't have that kind of bandwidth because you're so swamped in data. And so I think the potential for what it unlocks for product development and insights that are being shared back from the carrier side, it goes to risk prevention. It's pretty exciting.
So I'm going to follow up with another question off of that for our audience and ask someone to share a real case of either positive or negative outcomes of implementing technology.
I can talk about the positive case here, and I'll then pass it on to David for a negative case. I'm just kidding. So when it comes to positive case, we think we touched upon that. So SOV processing is one big area where we were working with an insurer. They had a team of like 100 plus people who were manually doing this, and these were really smart people, very well paid, who was 35% of their time was being spent in mapping these SOV document. And I think it would not come as a surprise to David that that happens often. Now with AI, they just drop the document, AI does that mapping, and they can move to the actual thing which requires human brain. So one thing I'm seeing is that things that were very neck down can be done by AI, and things that are neck up can be done by humans, and we can understand the risk much, much, much better. That's just one example. Second one is doing the guideline processing as well. So once you have the guidelines in place, AI can create an overview of the risk in terms of what's matching the guideline and what's not. That's a big time save as well. We have seen about 20% reduction in time in that particular process. And then that should be analyzed by an underwriter based on their context and so on. I'm scared of the way the world is moving right now in some ways, because the job of a human is becoming a context provider to AI. But in the short run, that's going to have a lot of positive impacts, and that's what we are seeing, especially for insurance, which, like we all know, right? It's a data business with service as a front. So once you are able to unlock that data, the zip file we spoke about, a lot of processes are going to change and get much more optimized beyond the ones that we spoke about: SOV processing, submissions processing, guideline check. There are like 12 more that I can share.
Thank you.
So a couple of thoughts. I don't have any real negative feedback.
Lessons learned, I should say.
Yeah, I can definitely highlight a couple of real life scenarios where our ability to process information and iterate on it quickly in ways that I wasn't able to, say 5 or 10 years ago, allowed us to offer more options very rapidly to a broker, and that solves their problems. From the underwriting, from the carrier side, if you're solving brokers' problems, you're solving the client's problems. And so I think that, things that would take, a week, maybe 2 weeks to turn around an answer because of how complicated the request was, we were able to put forth, in a matter of hours. And so, when you're getting that kind of feedback from the brokers that this is something they haven't had before, that's extremely satisfying. The only negative that I consider with it is not something we've actually experienced. It's sort of what I think about in terms of getting full-scale adoption is exactly that, is scale, is like, how do you integrate this in a cost-effective way? Because on the one hand, we're trying to improve efficiencies. On the other hand, nothing costs nothing. Like, there's no silver bullet. And so how can we integrate this into more aspects in a cost-effective way? I think that's still something that folks are investigating and trying to figure out. But again, I have not personally experienced that, but I think about it.
One point that I would like to add as a lessons learned is definitely the change management of it, right? Like, so you do have like the technology advancements, it's always evolving, right? And you will have to like get your stakeholders right up there. So I think proper training and change management are key. I think we learned it ourselves by like better utilization of the right resources and tools to train our team so they can make better decisions and not only just follow the steps that you are being asked to do, rather than like utilize technology to gain from it, right? And leverage all those tools and technologies available to them to put together a comprehensive change management strategy.
Yeah. So just on that same vein, I think I'd share two learnings from what we've seen. I think on the aspect of change management, technology is always in service of business, not the other way around. And so as much as you can have cross-functional teams working on a business problem that is solved through technology, I think those teams have worked really effectively. The other thing I would note is almost taking like a customer success mindset to how you're delivering on some of these projects. Where we've seen some of these things break in the past is a misalignment of what success looks like, right? Whether that's metrics or otherwise. So understanding what success looks like for the different stakeholders tends to be, and sort of getting aligned on it early on in the process has tended to yield better results than when it is not.
So
Yeah.
I just wanted to add a negative use case, which was slightly funny as well. So we had one customer implement AI for FNOL, and they got a call from a customer, the insured, that they met into an accident. AI picked up that phone call, having a conversation, and AI was trying to be empathetic to the person. And the person was like, you're an AI, you have never been in an accident. So don't try to be empathetic with me, just pass it on to a human. So there are areas where I think the simplistic way to think about where AI should be used and where AI shouldn't be is to put yourself in the shoes of the end user, that whether do you want to talk to an AI when you just met with an accident, or you want to talk to a human and actually get the claims taken care of.
Yeah, another positive case that that came to my mind is leveraging the technology and then like having business drives some things wherever possible, right? Like so, we implemented a technology or a rating solution for a large size commercial carrier like few years back, right? And everything was given to the business earlier. I mean, the rating and the rules and like all those rate workbooks were driven by IT and technology, but we, with the use of technology and your low code, no code platforms, we were able to give that in the hands of the business, and that actually helped a lot with like your rate revisions or like putting your speed to market initiatives out there.
Some of these topics and themes we've been talking about in the industry for some time now. So there's a need to start executing on these capabilities and technologies and strategies. So with that, I'm going to ask our panel to call out a call to action for our audience to transition from the talking to the execution. Dave, you want to start with your call to action?
Sure. I think from my view, from the carrier's perspective, there's a real opportunity for us to use the increased ability to analyze, the increased insights that we're able to deliver now with all these technologies we spent the last 35 minutes discussing, to be transparent and be sharing that type of intelligence back with customers so that they're seeing, more than just basic, you have a warehouse, so you ought to think about this, but tailored, risk-specific to their facilities, transparency around what's driving pricing and how losses can be prevented. There's a huge opportunity for our industry to share that and create value that goes beyond just risk transfer, right? I think that's the future of what we can be doing, is that we become a knowledge company that's sharing information back, as opposed to just we absorb your risk, here's your policy.
Yeah, I would like to add on to that. I would like to call one thing as an action item. So take these insights to your management, to your team, right? See how you can like really help your organization re-strategize or rethink the overall plan for your systems or underwritings or claims, right? So yeah, I would say like take these insights and then like have a productive discussion with your leaders and your organization in understanding how your current systems and models, are they really supporting your forward-looking resilient system where you want to be, right? And partner with the solution providers to help drive all that, right? Like, so we have like our partners here, like we have GhostTrap, Zensar, and like Insops with whom we are partnering. So partnering with the third-party solution providers appropriately will really help drive and solve so many things and help you build a resilient, forward-looking system.
I think my biggest takeaway is that this is the biggest transformation that has happened when it comes to technology. And it will improve a lot of things across every industry. For insurance, it will substantially reduce the expense ratios, improve the loss ratios. So if you think from that North Star, it's more about finding a use case with a strong business value and then iterating on top of it. The iteration would still be required to perfect it to your workflows, to your solutions, but just getting started, I think, would be my suggestion.
Yeah, maybe there's two calls to action that I might have for insurers. The first is you're going to transform from being a risk compensator to a risk preventer. It's a fundamental shift. You almost start looking like a consulting firm, less like an insurance company. The other is having a recognition that this cannot all be done in-house. which means you have to be able to sort of stitch the right partners and the right propositions to be able to hit the complexity of risks that you're seeing in market. There is adequate room to expand sort of your strategic partnerships capability or whatever else you want to call it. The technology is there to help you, but I think building that internal sort of customer first mindset could be the sort of the right thing for you to win in the future.
Thank you. And we are at time, but please join me in thanking the executives here for their insights around property.